Well, here we are, back at 7,000. If you would have tuned out just a few days ago and came back, very similar to what we've seen many times in the charts, it's as if you would think that Bitcoin hadn't even moved. But here we are, and many are asking themselves if the further trade is to the upside, or if, as we've seen time and time again in this market over the past 4 or 5 months, every pump is an opportunity to short. We're going to break that down, take a look at the monthly analysis, talk about Bitfinex's top trader and his $26 million drawdown. You thought you had drawdown. We're also going to be talking about the implications that the European Union's new 5 AMLD, their new anti-money laundering legislation, what effects it's going to have on massive exchanges and the entire European cryptocurrency zone, including Binance and OKEX, major exchanges over there. And we're going to top it off with a little special story about censorship in today's exciting episode of Breaking Bitcoin. Stay tuned.
I'm Naomi Brockwell for NBTV, and this is Breaking Bitcoin.
Welcome to Breaking Bitcoin, recorded live for you here in the Breaking Bitcoin studio. Today is December 19th, 2019, foul year of our Lord. Hopefully you guys are doing absolutely fantastic wherever you happen to be tuning in from, and whether you're watching us from across YouTube, Twitch, DLive, Facebook Live, or on Roku with the Investor News Channel app. If you want to support the show, make sure to subscribe, follow, share, and engage in the live chat. We've got such a fantastic show for you guys today. Before we begin, if your goal with your journey as a trader is to become a professional, whether to trade your own capital or other individuals' capital, whether you want a reliable side hustle to earn active income on the side, or like myself, if you want to take control of your portfolio, if you do not trust Fidelity, if you do not trust any of these wealth advisors out there with your own financial future, then I encourage you to check out what we're doing in the Premium Trading Group. We teach technical strategy, fundamentals, the psychological discipline and mastery necessary to maneuver these markets. Doesn't matter whether you want to join along with us and trade more passively on the daily, the weekly, the monthly, or if you are looking to actively maneuver through the lower time frames, you can gain access to our proprietary strategies and indicators. All of that and our group, our community, our mentorship at premium.cracking.cryptocurrency.com. Like I said, we've got a fantastic show for you guys today. I really want to talk about the 5 AMLD. I think that's really important. I think we need to get into that. More important, I think, than the price of Bitcoin, which we're going to get into and break down and cover. Very kind of interesting area of the market that we're in. Very interesting kind of thoughts and opinions that I'm hearing from people, as is often the case. But we're going to break it down. We're going to look at what setups we're looking at. We're going to look to the community. And of course, we're going to give away some crypto. Now, before we begin, for most of us in the crypto trading game, we're going to be managing multiple accounts, multiple exchanges, whether we're grabbing Litecoin on Binance, whether we're grabbing Decred on Bittrex. Some of us are going to be flipping over to things like KuCoin or many other exchanges to be trading spot altcoins in general, or to be trading spot Bitcoin, Coinbase Pro, Kraken, whatever have you. And obviously, you guys know that managing those multiple exchanges, managing those multiple accounts can become quite a pain in a body part. Luckily, our friends over at Coygo have developed a secure turnkey solution to this. They have a beta release of their application. It's completely free for you guys to use, completely free for you guys to go check out. Go check them out at koigo.crackingcryptocurrency.com. Help them make their platform better. For traders, you can spot real-time arbitrage spreads. You can see real-time, well, obviously you can see real-time charts. You can see real-time order book analysis. The big point there is those arbitrage spreads, and fitting into my ethos of decentralization and privacy, your API keys are always stored encrypted on your local machine. The security is entirely in your hands. Nothing is stored on their servers. And that was a huge point for me. And I really appreciate good people in the space that are building usable products for not only myself, but also the traders that I work with. So I'm very proud that they're sponsoring today's show. And before we get into the analysis, here's a brief word from them and their platform.
Do you trade cryptocurrencies on multiple exchanges? Coygo is here to help. View real-time insights, including trade analysis, order book superiority, arbitrage scanning, and more. No API keys required. Want to trade, transfer between wallets, or track your portfolio across exchanges? No problem. Just connect your API keys. They're only stored securely on your machine. Coygo servers never have access to your cryptocurrency accounts. Sign up now at coygo.app.
All right, and here we are back at the live scene. Now, I want to thank today's crypto comment giveaway sponsor, Spectre Security Coin. Make sure to go check them out at spectresecurity.io. And yesterday, as we always do, not always do, but recently have done, we asked you guys to guess, to predict, what would be the price of Bitcoin at the beginning of the show. It is now, you may be aware, the beginning of the show. So, as we always do, let's go over, give away some crypto, and see who has the best crystal ball today. All right, so here we are at yesterday's video. Did Bitcoin just bottom out? We talked about exchange fraud on BTC, the Lightning Network, and a little bit of a teaser for the EU's 5 AMLD. Yeah, that's right. You just saw me like my own video. Okay, let's see here. Let's see here. Now, of course, let's go check in with what the price of Bitcoin was. Let's go to the hourly. And go to the hourly right here, and we can see that the opening price was $71.25.99 on Coinbase. $71.25.99. Let's see here real quick. Got Philip Lyle, 58 incoming. Benjai saying, Justin fanboy before 5K subs. I enjoyed today's Bitcoin overview. I like how you went into the psychology of the market. I'm positive I'm not the only one that appreciates that type of breakdown. Thank you very much, man. Those are the things that I try to cover that I don't see other people doing. His prediction was 70.88. Hi, Tim. Is there a Tim in the building? Can we trade the inside bar on the 4-hour time frame or only on the daily? Inside bar setups are generally done on the daily. I haven't back tested them on the 4-hour. It's not generally something or a style that I trade. If there's been a time to get serious about Lightning, it's now. Heck yeah, ETH1. 70.60, you go chill. Very, very close. Hit BTC fraud. No. 71.30, 70.50, 72.10. Ricky Thompson. It looks to me that the closest one is actually Benjai once more. Benjai once more. Please correct me if I am mistaken. But I do believe that Benjai is the winner. Let me know if I got it wrong. But Benjai, congratulations to you, my friend. And get a hold of me in the Discord, and I will gladly tip you some crypto, my friend. All right, into today's show. Okay, and we are here in the live scene. We are here in the live scene. Let me get the chat pulled up. Let's do the sound off. How we all doing today, guys? Who we got in here? Larry Z from the East Coast. Ferguson, Blockchain Gains. We've got Wendy, RickieT in the house. We've got Forza World TV. What's going on to my DLive people over there? Peckham 27. It's Hard is in the building. Saintsy, Tyler. Roy Coin. You did not miss the roll call, my friend. We are just getting started. Monk, good to see you, my friend. I see Crypto Jack, the man, the myth, the legend in the building. Scrooge McDuck, strength and profit to you, my friend. Mr. Ether, Devin, good to see you, my friend. Coygo is in the building. Good to see you, my friends. Thank you so much for sponsoring the show, and thank you for all your support. All right. Hutch. All right, guys, let's get into it because we've got an interesting chart in front of us. And of course, listen, the question here is, let's start from the beginning as we always do, right? And first, let's just acknowledge this. Yesterday was awesome, right? Was yesterday not awesome? I mean, let's go down and just look at this. Let's go look at this on like the 30. Look at that, baby. Look at that rip roar. Look at that rip roar. That's beautiful. That's beautiful. You know, it's really inspiring. I got a lot of DMs last night, seeing comments in the members lounge this morning and last night and throughout yesterday. You know, people telling me that they're using mynx, that they're using time transformation, they're using Wadatar explosion. They're using their baseline and they were able to profit off of this movement. They're capturing this movement. You know, obviously there are some individuals that were sitting on the sidelines and they, similar to myself in some situations like that, just said, you know what, this isn't my trade. It doesn't fit into my strategy. It doesn't fit into my setup. And something about this doesn't feel right to me. So I'm not going to take this trade. And that's great. That's great to hear that, to see that from individuals. Understanding that even if you did not catch a trade on this time frame, even if you took a loss on this time frame, that the discipline and patience that I see coming out of the individuals that are going through our Pathways to Profit course, the discipline and patience that I see, Don Candon, of course you get a shout out, my friend. The discipline and patience and growth that I see coming out of all of the people in the members lounge, even in our general chat, is inspiring. It's really, really good to see people building their own systems, building their own strategies, utilizing the material, utilizing the, all the everything that we've been able to build over the past 2 years. It's really awesome to see. It's really awesome to see. And so huge shout out. Of course, yesterday was an amazing, exciting day. 10% movement in a day. You rarely get to see that, and especially lately. So huge shout out to those who profited off of it. It was a very exciting day. Pretty much, unlike regular days, pretty much glued to the charts all day long, talking it out with my team. It was a great, good time. And what do we have now? Kind of back to Bitcoin's regular behavior, and not too uncommon coming off of a massive movement like that. We had a little bit of the reverse polarity here coming in, the sell-off that did bring us down, from the high that we peaked at, closer to the mid 7,400s, around 7,450, so around those 7,300 levels that we were talking about yesterday. 71, again, so yesterday we were talking about one of our senior analyst setups, and that was monitoring. He didn't actually take it at 71 because he was monitoring, but looking at that $7,100 area to the $7,300 area, to be looking to either do a split bid, so it'd actually be a split sell, average into a short, so getting an average entry of around 7,250, and that would not have been the buku setup, but I know that at least several individuals in the group specifically took the $7,300 setup, so that's pretty cool to see. That's pretty cool to see. I think Jack in particular was one. I didn't get to. We didn't talk about his trade this morning, but somebody told me about his trade, so I'm sure he's pretty happy. And overall, a pretty decent movement in last night, shorting around that $7,300 area gave you kind of a good movement. And we're gonna go see kind of what the long-term progression, the long-term projection of this is. But overall, we can see a little bit of range behavior. We've reached a low. We've put in somewhat of a double bottom off of that low so far here on the lower time frames. We're looking at the 30-minute chart here on Bitcoin. And we got a range. We got a range, guys. We've got a range, and I think that individuals who are looking for the continuation of the upside are going to be looking to buy the breakout, and I think that individuals, for the most part, are probably going to be holding their shorts open in this scenario because, again, just kind of zooming out to the higher time frames here, like looking at the monthly here, obviously we are in a bearish downturn. We've been in a bearish trend for a while, and we got the powerful signal from Water explosion on the closure of last month's candle. Now we do have this nice drive into demand, but we have some other external factors here as well. There's nothing here that represents a market bottom. So in my analysis this morning, now I obviously want to honor what the premium members are paying for, so I'm not going to go and delve into the massive analysis that I did on this, but let's just look at something very, very simple here, like the 21 exponential moving average, right? And so we're going to go ahead, and we're on the Coinbase chart here. So we're going to go ahead and hide. Actually, we're going to go do this on the Bitstamp chart. I'm going to do this on the Bitstamp chart. So let's look at the monthly here. And this is just something that I want to point out. Look at where we're at right now. We're on the monthly 21 exponential moving average. Now, does the 21 exponential moving average act as a market bottom on average? Has it acted as a market bottom for the last 2 years? Well, the answer is that no, it has not. So what we can see here is that it has at times acted as a local bottom. So actually literally one time, and that's this scenario right here, back in 2018 in July. You could make the argument for this candle as well acting as a bottom, but really it was just kind of a little baby bounce off the 13 monthly EMA, not really significant in my opinion. Tag of the 21 and then putting in a candle. As you can see here, we do come all the way down, close down there, down at the 21 EMA, and then it acts as the local bottom. So obviously that was tradable on the daily, not so much on the weekly, and not so much on the monthly. But even though we got a nice bullish candle there, I mean, that is a 20% candle. When you look at the perspective of the monthly time frame, you can see that it didn't reverse the trend. We didn't bottom out there and start barreling up to the races. We local bottomed. We did put in a 20% correction, and then it was right back down to the races. So again, it didn't represent an opportunity to get long and stay long. There was a long trade there, of course. But one of the nice things about trading the way that we do, which is, hedging generally for long periods of time or being spot long for generally long periods of time is that it makes decision making very easy, right? Like trading is one thing, but what to do with your spot position is another. Are you spot long or are you hedged? And you generally want to hold that for a long time based off your higher time frame analysis, because your hedge is designed to protect you. If you know that there's going to be 20% oscillations in price, but you have a good determination with your technical analysis that the trend is to the downside, then why would you ever pull off your short? Why would you not just trade from a cash-based perspective, for example, as we are right now in a bearish trend, so hedged short? That means that if the price of Bitcoin goes up, we don't actually make money on that, but you can take the trade and you're still cloaked under the protective hedge. So you can take the money on the way up with the trade and then continue to ride the trade to the downside. Now, since the 21 EMA, as I've laid out, does not tend to act as a market bottom, it acts as a local bottom. Where are we right now? We're at the 21 EMA. And again, as a level of support, have we approached this level of support on high momentum? No, we have not. Remember, when we approach levels of support or resistance on high momentum, we have a higher probability to bounce off of them. But when we kind of creep down toward them, we have a tendency to just blast through them. And now I will say that we did consolidate at the 21 EMA for about 5 months back in 2018 before we had the big sell-off down to what EMA? I'll let you guys answer it. The 55. The 55. And the 55 does represent a market bottom level of support on the monthly time frame. You can go test this on a lot of different assets and you'll see the exact same thing. Go to the monthly, look for the 21, look for the 55. There are particular ways and particular interplays that they have. And we've talked about obviously the weekly crossovers, the daily crossovers of the 13 and the 55 as well. 13 and 21 is tradable. It's more aggressive. And so you have a higher drawdown rate, but definitely something that you can backtest and implement into your own strategy. And that's a very simple one. As I said, I used to just trade stocks utilizing those and never had any problem making money. People get far too complicated with their system building sometimes, but I digress. So anyways, where is that on the Bitstamp chart, where is that 55 exponential moving average sitting at? It's sitting at 50.29. And what is our downside target, right? What is our downside target for Bitcoin's price? 4,900. So that's directly in the ballpark. It's directly in the ballpark. 4,900, I'm told, is actually really, really close to 50.29. But, I could be off on the math. And we have not only the monthly 55, which is a market bottom area, not only that, but somebody also shared the power law corridor indicator yesterday. Let me see if it's over here. No. So here's the hash ribbons indicator with funding, and I think this would be a pretty good chart to put it on. So we'll go to the weekly here, and we will add that. And I find this pretty interesting. Yeah, all right. So as we can see here on the weekly, that is pointing us down to that 5,026. It's almost like there's some symmetry here. It's almost like these elements are connected, right? Obviously, we're still in the throes of minor capitulation, which puts us in a higher state of risk to have a blow-off bottom. Again, that movement down to 4,900, and the monthly is also pointing us down there with my personal trading strategy for the monthly sell signal that we just did receive. Now, that's less tradable than it is for hedging purposes. So let's look at where we are. How far are we from current price down to support, right? 30%. So I don't know how long it will take us to get there, right? I don't know how long it's going to take us to get there, right? If we go back to the monthly, we can see that, and we put in a 20% correction. We're halfway there. We've already had a 10% correction so far. Maybe 10% more to the upside to go, which would be conveniently putting us right around that $8,000 high volume node level of resistance and supply that I've been talking about that I want to reshort. But I digress. For a full risk trade, I'm already hedged. The weekly 200 simple moving average is also there as well, the area that supported price previously. Now, the bullish scenario here is that would be a higher low for Bitcoin. It would be a higher low for Bitcoin previous to December, and a good sign. And so obviously we've got a great level of confluence here for downside targets, for looking to pull off hedges, for looking to add to spot long positions, and for kind of understanding the overall direction of the trend. Can we see 10 to 20% oscillations or kind of bounces off of this current level of demand that we've tapped off of? And if you don't know what I mean by level of demand, let's go back to the Coinbase chart where I've plotted out, in my opinion, where I've plotted out, in my opinion, and the weekly makes this quite clean, where I've plotted out, in my opinion, the 4 most significant levels of supply and demand. Obviously, the levels below us currently being demand because we can look for them to act as support, and currently the overhead level acting as resistance. Can we see a correction up to the $8,000 level? Absolutely. What am I going to be doing at that level? I'm going to be selling into it. Why? Not only everything that I've just laid out, but also, again, we're coming up upon the weekly. Look at the 13 EMA on the weekly. Look at the 55 EMA on the weekly. We're about to get the cross under, and that confirms bear markets for me. That confirms bear markets. Now, with Bitcoin, obviously, we got the 1355 EMA, and we had a few more months of upside. Not like 6 years of upside, but we have to understand that generally it's not there to get you into the trend early. That's what your daily strategy is for, to get you into trades. It's there to help you determine if you have not already realized that the trend is bearish, and you definitely need to be hedged now because it will protect you from the worst lows, from the worst drawdown of the movement, and that's 30% to the downside. So remember that when you hedge, with a short sell, you don't gain money on the movement down, but you do gain Bitcoin. Right? So for those looking to add 30% to their spot holdings who maybe have not had a great year, or who've had a great year and they just like to top it off with 30% more Bitcoin that they can then exit their hedge down at support, look to establish or unwind their short position, look to establish a long spot position from that area, and then have something beautiful to ride for for all the bullishness that people are feeling toward 2020, 2021, the halvening and everything that will come from that, It's kind of a no-brainer, guys. Now, no trade ever in the history of mankind is 100% accurate because my technical analysis is on point or because your technical analysis is on point. The market is unique. Anything can happen, and this can be easily invalidated. So with this idea, we also want to have a firm exit plan as well, to where we've been invalidated, and hey, guess what? This was the local bottom, and we are going to pump from here. And for me, that would be closing above our current level of supply, or, in my opinion, potentially, and you want to be careful about this, if we do close above the 55 EMA, currently sitting at 78.24, we want to be careful about that because often what will occur, and I've talked about this before, and we can see it when we got the cross, we can see it when we got the crossover. So let's go back and look at when we got the weekly crossover, and it's not as pronounced, but okay. Here's the 1355 crossover confirmed on this candle, and what did we initially see? As soon as the crossover was confirmed, we do see a pretty bearish correction, a 12%, almost 13% candle to the downside before the trend resumes, and that's pretty common to see, especially on the daily because our EMAs are going to be tighter, right? That's pretty common to see. So honestly, as we get closer and closer to this cross under, it can occur before the cross under, it can occur after the cross under, it cannot occur, right? It's just something to be aware of. Often we can get a correction back to that level to where the crossover occurred, either the 55 or the 13 in this case. And we often see rejection from there and then continuation of the trend. So again, that just strengthens that kind of setup for, hey man, if we get back to 8K, that's getting sold into, at least by me right now, unless something dramatically changes, which I don't see at this point in time. But again, you have to be open to the market dynamically moving at all periods in time. Let's see here. So beyond that, I just kind of wanted to talk about those concepts. Look at the higher time frames here, the weekly, the monthly, nice tap in the demand. We could see another potential 10% to the upside, but it's not really a trade that I'm looking for. Again, there are 3 levels of risk here as I analyze the market. The conservative trades are being hedged and only looking for shorts. Why? Because if you're a conservative trader, you do not trade against the low, you do not trade against the trend. The trend is bearish, guys. Doesn't matter if we hit support, you're not trading reversals, you're conservative, you're trend following, you just are patient, you let price come to you. And for you guys would be hedged and looking for price to retreat back to 8K to sell into it to ride it down to 5,000. For the middle line traders, so this is going to generally fall into myself, although I can at times be aggressive, but not as I'm about to explain. Midline would be hedged, and you guys are okay either with a lower time frame, maybe lower time frame scalping strategy that potentially you've automated, and you're taking discretionary trades or PTP trades or system trades on, like the daily, maybe the 4-hour, the 2-hour, whatever, whatever kind of time frame fits your needs the best. And you guys might have caught that long, would have charted out that level of demand, watched that area for a reaction, most likely bought on the stop loss hunt potentially, or maybe you would have waited for price to recover, and you would have captured some profit out of that movement yesterday, like a lot of our members did. And you'd be looking at the chart right now, most likely flat, with, in my opinion, most likely a bearish bias, but you're willing to take longs. You're willing to trade against the dominant trend, but you're being protected by a hedge, right? So you're not fully exposed to Bitcoin's price fluctuations. You are cash based, but you're taking longs and shorts. You're middle risk. And then aggressive would be having the notion that this is the market bottom for Bitcoin and dropping your hedge, going all in on Bitcoin, because if you don't have a hedge, you're all in on Bitcoin. I just want you guys to understand that, right? Like, I'm not using the incorrect terms here. If you do not have a short sell hedge, right? If you do not have a futures short hedge, you're all in on Bitcoin. For all the Bitcoin that you hold, you are fully exposed to the fluctuations of the market. And the purpose of a short is to protect you so that you're not under that, guys, right? Anyways. All right, so let's get down to the daily. Let's talk about PTP on the daily. Now, let's get rid of the EMAs. Let's bring up the baseline, and let's just chop through this because, again, the way that we trade, this is super clean cut, guys. Closed above the baseline, and we do have a MKIV crossover that we'll be confirming, not on yesterday's candle, but on today's candle. We will get a 2 confirmation setup, right? Looking at commodity channel index. Commodity channel index is above the dynamic zero line. Very, very tight to it, though, but it is above depending on today's daily close. And we do have a green bar above the explosion level, but not a rising explosion level. So volatility filter is not 100% there. So again, kind of the setup here would most likely be either looking to take a daily long, and the risk to reward to this is pretty good with the close below the baseline. The risk reward to this is quite good. Basically, if you're taking a long on the daily from this arena, then you are predicting the movement to 8K and you're kind of targeting that area. Which is not a bad setup in my opinion, right? And I'll be quite honest with you guys. You could go either way on this movement. Again, if you want to be conservative, you're not going to go long here. If you want to be conservative, it doesn't matter how high price goes. You will be targeting 8K or the overhead level of supply to get short from, right? Obviously, the individuals so from a percentage perspective, the trend here to the upside is not your friend, right? The trend is your friend to the downside. So individuals that have sold into this on the top, they've currently made the right decision. Now, price has retraced quite a bit from that high and given us a little bit of an attractive entry point here. I would really like to see looking at this discretionarily, I'm pretty hesitant to take the long. I don't feel the conviction in it. I will not be taking the 2 confirmation long here. Again, I will be targeting that 8K level, and I'll be kind of maneuvering here on the LTFs to fit my needs. But hold on just a second. I gotta wait for this candle to close. Sorry, I'm in a my system's running a trade right now. What was I going to say? Yeah, I just don't feel the conviction in it. It doesn't feel right to me. It doesn't feel right to me. So I think right now that the current setup was individuals that hit that top, but we'll get to that. We'll get to the discretionarily here in just a moment. Let's keep it clean and clear, guys. So PTP daily time frame strategy. There is a 3 of 4 long setup, right? And again, if we analyze that through the lens of the weekly or the monthly, it is a counter trend trade. So if you're being a conservative trader, it's not a trade that you're going to take. If you're being midline aggressive, then you'll take it. With this particular trade, I would probably recommend 1% or less risk. Potentially, my discretion is playing into that somewhat, but that's how I feel about it. That's how I feel about it. And current initial take profit target on that trade would be $75.32. 75.19. 75.19 would be your first take profit on that. Other than that, I think for discretionary traders, let's go down to the 4-hour time frame right here. Discretionary traders, I think hit it pretty good with targeting these highs or with targeting that $7,300 area right here. I would most likely be looking to take profit on the short. We can see on the 4-hour time frame, even on the 4-hour time frame, Wadatar explosion still has a rising explosion level, still telling us to be long on the 4-hour time frame, even with that correction back to the 4-hour baseline. And we haven't actually closed below it. So let's see if we can actually get somewhat of a 4-hour pump, and that would keep you in. That would keep you in. Otherwise, an individual would have gotten into a 4-hour long. They would have taken a most likely right here. 4-hour setup right here and exiting. If we close under the baseline here, potential close below and rejection from the point of control. I could see that. Not point of control. What am I saying? From the baseline. And overall, they've locked themselves in about a 5% trade. Not bad. Capturing half of yesterday's 10% movement. That's great. It's fantastic. That's high performance. But again, the conservative trades are to the downside. From where we're at right now, this is an area of the market where discretionarily, I'm sitting on the sidelines, just trusting my lower time frame strategy to take advantage of the volatility right now. For discretionary trade, again, the discretionary trades for me are too short from 8K. So that's the current setup that I'm looking at, that I'm monitoring. And really, I'm happy to see that, the larger movement here is increasing my BTC position by 30% with my hedge as price fails and drops down and we hit that 55 EMA. And then we'll be looking to establish most likely longer spot position. So, just a time to be cautious, to be safe. If you want to, I think that there are potential some decent trading opportunities here on the 4 and 2. If you do have a long bias, just be careful because you are trading against the dominant trend. Now, with that being said, guys, I would really like to check in. Just give me a moment. Let me make sure. Let me see if I can get. Junior analyst Midwest Attempts on the line here. Okay, I've got him. He is available. All right. So with all this being said about Bitcoin's activity and uncertainty in the market, I think it's high time we check in with the Bitcoin weather and see what the weather's like over there in Bitcoin City. I've heard it's summer weather over there in Bitcoin City. Let's check in with today's Bitcoin weather report with junior analyst Midwest Attempts. Midwest, what do you got for us today?
This is Jason when he first learned about Bitcoin margin trading on BitFinex.
I just try to do my best out here, and I mean, it's not like you guys give me an amazing amount to work with, but I mean, I'm still here, and I mean, look at it. It goes up, it goes down, it goes up, it goes down. Is there no stop? Is there no end? I mean, some people say see you on the moon, and I'm like, I f***ing hope so, because I don't want to breathe air anymore. Because this is getting exhausting. Back to you.
Sorry, we've all been there, Jason. We've all been there. Just hang tight, brother. Just hang tight, brother. It's gonna be okay. It's gonna be okay. I promise. We're gonna give you better to work with here. Get you a nicer studio. Promise. So, big thanks to junior analyst Midwest Attempts there. Please send condolences to his DM. Okay. Still standing. I consider that a win. Amen, brother. Amen, brother. Okay. Now, we've got some interesting stuff to go over today in today's Crypto Currently episode. Let's go. All right. Our first story today is coming to us from Coin Rivet. And this one's actually new to me, this outlet, but just want to kind of talk on this to give you guys an idea of perspective, okay? Because I think as junior analyst Midwest Attempt said, for those who have not taken the time to drill down and build a trading strategy and are still overall in that area of their trading where in reality you're kind of just clicking buttons based on, you know, really if it comes down to it, you're like, okay, I kind of want to go long here. Oh, price is going up. I really want to go long here. Oh my God, it's really going up. I should go long here. And then price moves down. right? Or conversely, for looking at shorts. And that's okay. It's an area of the market where most novice traders will be at some point in their lives. And the point is, if you can learn from all the mistakes that you make, every single mistake that you make in your life is a learning opportunity. We just hope that they're not $26 million mistakes in 1 week, as we can see here from what is considered to be one of the top Bitfinex traders. Now, during this week's slide into the $6,000, let's say, terror region for Bitcoin, one Bitfinex trader seems to have lost as much as $26 million, according to the Bitfinex leaderboard. Perhaps putting into perspective just how bad trading can get for some individuals. Now, according to the Bitfinex Exchange's leaderboard, a trader who goes by the username Joe007 has lost a grand total of $26,136,000 Bitcoin, or excuse me, $26,136,000 by trying to long Bitcoin while it is currently in its months-long downtrend. Now, the trader's losses do correlate with the steady rise in the amount of Bitcoin being locked in long positions on Bitfinex, with the amount rising to 47,157 Bitcoin long from 26,660 Bitcoin on November 22nd. Now, with long positions stacking to all-time high levels, a long squeeze, of course, seemed to be on the cards. Although losses among market participants trying to long this bottom will only be realized if they decide to cut their losses and close their positions at a loss or get liquidated in the next stab down. Now, Joe007, who is currently in massive drawdown and facing a crippling loss, happens to be the same trader who was at the top of the Bitfinex leaderboard during September when he had an unrealized profit of $14.2 million. Now, Bitcoin has now been in a downtrend since June's $14,000 high, with 4 lower highs marking the initial signs of a grueling bear market. The 2018 bear market did, of course, see Bitcoin drop from 20,000 to 3,150, with price action that looks eerily similar to what we've seen so far. Now, while Bitcoin has seen a small relief rally, a further drop to test the $5,000 levels could potentially leave Joe007 and other bullish traders counter trading the prevailing trend completely bust. Right? Now, whether Joe is correct or incorrect, we have to realize that large amounts of capital do not a successful trader make you, right? This is all perspective. Large amounts of capital do not a great trader make you. I have met many individuals in mentoring and in teaching and also in my time in the pits that, retail traders can often come in with large amounts of capital. I've seen doctors and lawyers and all kinds of individuals think that it's easy to trade the stocks, it's easy to trade Forex, it's easy to trade crypto. And it can be with the right approach and with discipline and with patience, but you have to learn those skills patiently over time. And often individuals, money management, psychology, patience, discipline, those are the lacking skills. Often technicals are far not the problem. The problem with technicals is people just tend to make them far too complicated. And they've got 50 million lines on their chart and they're looking for patterns, and it's exhausting. But just to put this into perspective for you guys now, so we don't know whether Mr. 007 will be right. What we do know is that someone's betting big on Bitcoin. And, we can only wish him the best. So let me know what you guys think in the comments section down below. Do you guys think that Mr. 007 is right? Are we going to look back in a few months and be like, man, wish we had been longing with Mr. Joe? Or is he going to be another victim of the bear market? Time will tell. Let me know your thoughts in the comments section down below after the show if you're watching this on a Breaking Bitcoin Bits, and I'll give you my thoughts and opinions. Now, today's main story is coming to us from B in Crypto. And of course, we're going to be talking about the European Union's new 5, this is the 5th, is what this stands for, AMLD, Anti-Money Laundering Directions. So this is pretty significant, and I think it's very important for everybody to understand this as they're looking for future trends. Now, the EU has updated their anti-money laundering regulations, and they're coming to effect January 10th in Europe. And it's known as 5 AMLD, or the 5th Anti-Money Laundering Directive. And the new rules directly address crypto companies for the first time ever officially by the European Union. And it looks set to have a pretty large impact on our industry. Now, This 5 AMLD was first detailed in May of last year, and European Union member states are going to be required to implement the amended rules in their national laws in less than 1 month. And the crypto space is buzzing with the implications of what is inside these documents. Now, the rules, for the very first time in European Union history, define what is meant by the term virtual currency. And it is defined by 5 AMLD as, and I quote, a digital representation of value that is not issued or guaranteed by a central bank or public authority, end quote. So the incoming regulations are going to be requiring custodial services they're going to require that those offering custodial services for virtual currencies to abide by the AML regulations laid down under the preceding 4 AMLD, meaning that those who are offering, companies that are offering custody solutions for cryptocurrency investors are going to have the same requirements as traditional financial institutions in regards to performing customer due diligence, as well as submitting suspicious activity reports on their customers to regulators. Now, what this means, obviously, is that exchange platforms, cryptocurrency exchange platforms that are currently offering services within the European Union are going to have to begin submitting information about customers to the relevant authorities, and they're going to have to start performing due diligence checks on user activity that they deem suspicious or that the regulators deem suspicious. Now, of course, 5 AMLD is also said to significantly increase the power and authority of the Financial Intelligence Unit. The FIU, the Financial Intelligence Unit, will now have the mandate to obtain the addresses and identities of token holders who are conducting business on exchanges that are offering services to European members. Now, European citizens. Now, how this will be achieved is not explained yet, as it's still unclear how it could possibly do this. Nonetheless, the FIU is being granted expanding authority to begin investigating the cryptocurrency space. Now, the impact on the industry could be absolutely dramatic. As Larry Cermak from The Block pointed out in a Twitter post, giants of the exchange industry such as Binance and OKEX will now have to comply with the new regulations or cease offering services within Europe. Now, Binance, of course, in particular, being one of the most popular crypto exchanges in the world, thanks in part to its reasonably high withdrawal limits without requiring KYC, 2 Bitcoins per day, they would need to overhaul their own policies, directly affecting a large part of their user base. So no longer 2 KYC free Bitcoin withdrawals. That would be not allowed under this new regulation. And remember, Binance and OKEX are based in Malta, which is a member of the European Union. So if they choose to not change their policies, they need to choose to move from Malta. Now, I don't actually know, and please, somebody tell me if they do know. I'm going to be reaching out to some individuals to get some clarification on this later. But my question here is, if Binance chooses to remain in Malta, can they choose to no longer offer services to citizens or citizens of nations that are members of the European Union, and they can continue to offer their services to citizens of nations that are not members of the European Union without changing their KYC requirements, or just by dint of them existing in Malta, a member state of the European Union, they will be required to offer those same, they will be required to operate under those 5 AMLD requirements for all citizens, regardless of what nation state. Because if it is the latter, then this is absolutely dramatic. And that means that, yes, no matter what, Binance is going to have to move away from Malta, because how much of their user base could these exchanges potentially stand to lose for individuals that are utilizing Binance for their 2 Bitcoin KYC free withdrawals every single day? Not free, but KYC free withdrawals every single day. That's a huge portion of the user base. And it would be a large portion of that could be gutted overnight with this regulation. Now, Binance obviously faced a similar dilemma earlier this year when they saw the exchange pull out of the United States markets abruptly before they launched Binance US, a much less and reduced but regulatory compliant company and platform for American users. Now, of course, other crypto businesses have already shut down as a result of the incoming 5 AMLD changes. Bottle Pay, for example, stated last week that the new regulations would make it impossible for them to continue offering their social media tipping service in a way consistent with their current operations. And rather than compromise, the business announced that it would cease operating at the end of the year via a press release. Now, other businesses such as SimpleCoin and ChopCoin have also made similar announcements. Now, although the incoming regulations are certainly going to change the way that European cryptocurrency companies operate, some seem to be embracing the change. A representative of the Exmo digital asset trading platform wrote in a Medium post that the new rules would provide greater certainty, something that many businesses serving the space have been eager for in recent years. Now, similar to what we covered in our reporting on Monday, this is a question of whether or not greater regulation in the space will ultimately help the industry mature, or in layman's terms, make Bitcoin number go up and boost adoption, particularly among institutional players, right? And we have, again, two big sides of the coin on this. Coin one is generally concerned with the price of Bitcoin, and they're like, listen, we want that number to go up. We want to make money off of Bitcoin, and we're going to need regulation to do it. And we need to get it in. But also there's more to that, because listen, the idea that, think of any financial instrument out there. To get this into users' hands, it has to be regulated. And unfortunately, traditional finance owns and operates the current system of regulation and introduction of financial instruments to citizens. And it's an okay price to pay. It's a sacrifice that must be made to put the instrument into individuals' users' hands, because they're not going to change what Bitcoin fundamentally is. It's still going to be unfungible, uncensorable at its core, at the code base. It will only be with the use of the systems that are set up, these third-party systems, that will make it censorable, non-fungible, things like that, right? You won't be able to directly censor the Bitcoin blockchain. You will be able to go after people outside of it through social engineering. So, and some people say that, putting that into their hands would still allow you, individuals who are educated, to go and utilize Bitcoin the way that it was intended to be. And that is going to create the groundswell, because then all you need, once this is in people's hands and they're used to using it in this unregulated way, and it becomes illegal to use Bitcoin the regular way, sort of, kind of, right? Then what you can do is, all you need is an increase in government totalitarianism and, a rise of public sentiment against the government and the traditional financial institutions, or the dollar, or the Federal Reserve, or the current system of, the financial structure. And then you have people beginning to en masse go outside of the system and use the system illegally, of course, because all things that, change laws are illegal at first. Things that are generally outlawed by the government either remain illegal, are changed later, or end up being a reason why a government is overthrown. We've seen this throughout history over and over and over and over and over again. So, that's a really good case to be made there. Or is it that no regulation, we're going to go it alone? I find that hard, that we're going to have no regulation on Bitcoin. I think that ship has kind of sailed. I think that, obviously with the platforms that are coming in and the institutions that we already have and the legislation that's being passed, this is a good example. We're not going to get through this without regulation on cryptocurrency. The question and the conversation that we need to have right now is, what side of that conversation are we going to be on? So I'd love to hear your guys' thoughts and comments and opinions on this. Please, this is a very important issue. Let me know all your thoughts and opinions down below. And if one of you can answer that question for me, I'd highly appreciate that as well. Now, we're going to cover one more story before we go to break today. And our final and last story is going to be on Binance. And this is from a user reporting that he's having trouble withdrawing funds from Binance when he attempts to withdraw those funds to Wasabi wallet. Now, according to this Twitter post, user @Bittlecat, love that name. This is a Binance user. He reported his withdrawal was suspended when he attempted to move funds off of the Binance exchange into his Wasabi wallet. Now, for those of you who are unaware, Wasabi is an open source, non-custodial, privacy-focused Bitcoin wallet. And what makes it unique relative to other wallets is that it has a native implementation of the CoinJoin technology. And they call it Chauman CoinJoin, which can be described as, in their words, trustless coin shuffling with mathematically provable anonymity. And this is just a very simple way for you to blend your UTXO splits so that it becomes very difficult for you to track the Bitcoin on the blockchain to your personal identity, right? Obviously, if you go to Coinbase and you purchase BTC, that BTC is going to be linked to you. That UTXO split is now linked to you no matter where you send it. People can always link up your personal identity, or government can always link up, or a malicious individual or malicious actor is going to find it fairly trivial to link up with good chain analysis, your personal identity to that UTXO split as that maneuvers throughout the blockchain. Now, when you do coin join, you are basically trading your UTXO split for somebody else's, right? And you pay a fee to the service that provides it. And now you have Bitcoin that came from somebody else. So now it becomes very difficult to track to track this. And again, this is a very popular method for doing dark web transactions, even when purchasing Bitcoin on Coinbase, sending it to a mixer or a blender or whatever you want, mixing it up, segregating your UTXO splits and then moving them around. I think Naomi has a great tutorial, I think, on Wasabi Wallet. I don't know if it's Wasabi Wallet specific, but I know she covers UTXO splits on her YouTube channel, so definitely go check that out. Maybe we'll cover that at some point in time. There's a lot of good tutorials on the interwebs here. Now, the Binance user in this case, the Binance user's concern in this case, besides the obvious fact that his withdrawal was suspended, and as we can see here, here's the tweet. He says, "Bitcoiners be warned. This is what happens if Binance SGD finds you withdrawing to Wasabi Wallet. Not surprised that my transactions are tracked. It's KYC after all, but I'm very concerned that Binance knew I was sending to Wasabi when all I input was a BC1 address, nothing more. So that's a Betch32 address. It's the newest protocol for addresses." And this is his message to the Binance team. He says, "I wish to withdraw my BTC out of my address. I've gotten the withdrawal suspended due to risk management. Not sure what that's about. Give me an explanation." And this is the response that he got according to him, which is that Binance had performed a periodic review on his account, and they have a few questions with regards to your account activities. And they noted that cryptocurrency withdrawals were going to wasabiwallet.io, which upon our review is a mixing private wallet provider with a total amount of XBTC in total. The addresses are listed. And then they ask him all these questions. Kindly explain why you are withdrawing the funds to Wasabi. Advise us of the following. What is your current occupation? What's your income range? This is... it's none of their damn business. So this is extremely concerning. Now, obviously what's concerning here is that Binance was even able to detect this as a transfer to a Wasabi wallet. Now, the only input into the transaction was a BC1 address destination, revealing that Binance is obviously using more advanced tools designed to thwart anonymity-minded transfers, as well as to comply with ever more demanding AML KYC, like the 5AMLD that we just discussed earlier. And this regulation is becoming increasingly burdensome in the space. And look what it is. Look how Binance, for example, is responding. Now, obviously, while Bitcoin on a protocol level remains largely censorship resistant, and it's unlikely that it is unlikely to ever be directly sabotaged, Bitcoin's protocol level, by regulatory regimes. It is obviously where the space intersects with traditional finance, whether on a retail level, on a fiat on and off ramps, and now even crypto exchanges based in foreign and even regulatory friendly locations like Singapore that will impose increasingly demanding AML rules on their users. Now, looking at the rules being laid down, as we just discussed, by the likes of 5AMLD or the advanced chain analytic tools coming from firms like CipherTrace, for example, designed for compliance and unprecedented tracking of users with identity decloaking features built into them, it's clear that all of these initiatives are aiming to collect an unprecedented amount of insight into Bitcoin use activity and on-chain activity. Now, while it is recommended, and I advocate, that crypto or Bitcoin users opt to protect their privacy using tools like mixers or Wasabi Wallet, the problem comes from associating your coins or addresses that are associated with fiat on and off ramps or registered exchanges where you've done KYC AML with your mixing activity. So this was a KYC address that an individual was utilizing. He tried to withdraw to a Wasabi wallet, and now he's basically blown his cover. He's blown his privacy. That is always on there for the chain to know. Binance only needs to report this. Well, the transaction's not on the blockchain yet. But once this goes on the blockchain and Binance has this data logged and files it with regulators forevermore, that mixing activity can be tracked to him. And if government ever decides to crack down on mixing or make mixing activities illegal, this puts an individual in a very precarious situation. Now, the problem comes from associating your coins or addresses here with mixing activity, which mixing activity is progressively becoming subject to red flagging by industry oversight mechanisms, as we can see here being deployed by Binance. Now, Much of this development in the name of stopping crime and illicit activity that we're seeing in our space is quickly becoming antithetical to the core principles of decentralized, permissionless networks like Bitcoin that we are attempting to embrace and advocate and promote in this space. Now, while an argument can be made that this type of regulation will be largely positive for growth and institutional adoption of our space, it's also becoming unsettling just how much influence government and financial authorities are exerting on our transactions or will have on our transactions in the future, with the prospect of global crypto blacklists becoming a genuine future threat. So, use wasabi, guys. Use wasabi. Mix your coins. Fight the good fight. We got to take a quick break, guys. Let me know your thoughts and opinions on this subject in the comment section down below. And for tomorrow's Crypto Comment giveaway sponsor, we're going to randomly pick a winner. In the comment section down below, let me know how you secure your coins, how you secure the privacy of your UTXO splits or your crypto holdings if you're not talking about Bitcoin specifically. Do you use a privacy-focused coin? Do you purchase your Bitcoin peer-to-peer? What privacy methods or mechanisms do you apply to your Bitcoin holdings? And I'd love to hear that, comment on them, and maybe get educated by you guys on some things. So we're going to take a brief break. We're going to hear from our friends. We're going to hear from our friend Jason a little bit more. If you guys are supporting the content, make sure to subscribe. The notification bell will ensure that you never miss an episode when we go live every single day. Thumbs ups are highly appreciated over there on the YouTube platform. And if you're on DLive or Twitch, consider giving us a follow or subscribing to this channel. That is how we continue to support our staff and continue to grow this channel every single day. Thank you guys for all the support. Make sure, again, our friend and sponsor of today's video is Coygo. Make sure to go check them out at coygo.crackingcryptocurrency.com, COYGO.crackingcryptocurrency.com. Their platform is completely free to use. Go and give it a try for yourself. All right, guys, we'll be right back. Don't go anywhere.
This is Jason when he first learned about Bitcoin margin trading on BitMEX.
Why? Why? Give it back! Give it back! Give it back!
This is Jason 6 months later after signing up for Bybit with the Cracking Cryptocurrency referral link found in the description below. Don't make the same mistake as Jason. Sign up today at bybit.crackingcryptocurrency.com.
And we're back, guys. Hopefully you guys are doing great through the break. And the first thing we're going to do coming back from break is, of course, reward our loyal viewers over there on DLive with today's Lemon distribution. And distributing rewards, congratulations in advance to today's winners. 30 seconds, and we'll have the results on that. Meanwhile, over here on Bitcoin City, I exited my position, got an early exit signal, so that's a break-even trade for me. And waiting for the next signal. We're probably looking at, this is the lower time frame again, just looking at what we're doing actively, looking at a potential long if we get some confirmation. To just wait, it'll just take a while for us to get the trigger. Now, getting back into today. Let's do today's question and answer section. So I'm going to go and see what you guys got for me today. All right. Good questions. Good questions. Thank you guys so much to the moderator team for compiling this for me. I highly appreciate it. All right. So, Ricky Thompson over on DLive says, what a joke. Are they passing all these rules to protect us or just theater as fiat is the first choice for crime? I absolutely do agree with you. And, unfortunately, something that I've learned in life is this. And I'll even use the clickbait word or phrase here that so many people throw around, often disparagingly. But in every conflict, there's good people on both sides. When we're young, it's very easy because, there's a lot of people that have troubled childhoods, right? And even if you don't have a troubled childhood, I think that it's pretty easy in the world that we live in to get a feeling that you or your society or your culture or your whatever your in-group preference is, that you have been wronged, and that whoever you have labeled as the enemy is, or excuse me, that your group is right and was wronged, and that whoever is wronging you are the oppressors and wrong. And we often carry that mentality forward into our adult lives, and it is very difficult for many individuals to kind of make that transition. But it generally always occurs. Generally, as we become we become adults, and we begin to, and it's unfortunate because it makes the world very, very complicated, begin to see the nuance that there are in any situation where there's conflict. There are good-meaning people, good-intentioned people, and genuinely good people and bad people on both sides. There's never been a situation in history where one group was all good and were wronged, and there were no bad people in that group. And there's never a situation where the people that are doing the conceived wrong are all bad, and there's not any good intentioned people or good people in that group. So, it makes the world complicated, and it makes viewing life rationally and being objective difficult. Because there are individuals, so let me finish that train of thought. There are, of course, individuals that are working in government, that are working in regulation, that genuinely have the best interests of citizens in mind. They genuinely believe or think, and we can argue that they're wrong, but they believe what they believe. Life is generally conflict between belief structures. This is why understanding philosophy and your belief structure is so important. That think that they're doing the right thing, that genuinely do or are concerned about the risk that cryptocurrency poses to individuals, or that lack of regulation poses to individuals. They do believe that these things that have occurred and what is potentially doable on the blockchain, for example, is a concern. And then, of course, you have the main argument from individuals in our space that, regulation equals bad. Regulation is evil. It is continuation of the legacy financial system. And although I do genuinely agree with that to the largest degree, we do have to understand, and I just want us to be cognizant, and I talked about this a little bit yesterday. What's another meme that I can use here? Be the change you want to see in the world, right? We talk and I actively promote for a self-regulatory organization or an SRO approach. I think that the crypto space can come together and regulate itself, but the only way that we can do that is by being keenly aware that there are many bad actors in our space, and we have to be very careful that we do not ignore that. The burden is on us to call out the bad actors in our space. That's why we talked about hit BTC yesterday. That's why I actively call out fake traders. That's why I actively call out scams. That's why I actively have never ever put any sort of sponsorship or friend or partner on this channel who would basically besmirch our honor or be involved in selling something that I considered a scam for an easy turn. Again, we get contacted all the time by coin projects wanting reviews or fly-by-night exchanges wanting us to promote their services. And the offers can be pretty lucrative, I'm not going to lie. But we say no because that's not the right thing to do. We want this space to be good. And what I've learned in my life is that being honest, ethical, and just honest, being communicative of where you are, who you are, and what you're selling or what you're doing or what your project is, honestly, if you do the right thing consistently and you build your reputation and you build your name, people will respect you, people will patronize you, people will give you their business. And not only that, but you'll actively be making your space and the world, hopefully, a little bit of a better place. So I definitely agree with you. I definitely am advocating for the self-regulatory approach, but it's also incumbent upon us, if we're going to have a shot to do that and if we're going to do it successfully, that we do not shy away from calling out the garbage that is in our own space. We have to clean our own side of the street if we want the right to run the street sweepers. Devin Salmon, great question. Thank you, Ricky Thompson. Devin Salmon asks, can you mention any tweaks to Wada Atar, MKIV, or other markets, or for other markets, stocks and Forex specifically, which you may have observed in a PTP context? In general, what I've noticed is that for stocks, for example, stocks, you can be a little bit more aggressive with discretion. So what I've noticed in stocks, I would say actually reversal baseline bounces work a little bit better in Forex. So you can build specific strategies based off of that. Not reversal strategies against the trend. I don't genuinely advocate for that, and that's not my strategy of trading. But you know, reversals within the trend typically have a pretty good rate of success with a correctly tuned baseline in Forex, and I do like those setups and strategies. As far as specifically tuning those indicators, you know, when you get into the Forex market, you just want to tune, again, I've talked about this before, you want to avoid overfitting, right? So Bitcoin is a fairly unique market, right? Now, there's two approaches to this, right? You can tune strategies that work really well on Bitcoin. And what I've noticed with building strategies is that if you tune something to work really good on Bitcoin, it'll work really good on Bitcoin, but it typically won't perform as well or even potentially poorly on other assets, right? Now that's one approach, which means that you're going to have to develop another system for Forex or for cryptocurrency, right? You can utilize the same indicators potentially, but you might want to consider adjusting to a different indicator sweep. But you're just going to have to, you know, set them to the defaults, see what your baseline reading is, and then see how you can adjust the parameters. And again, in Forex specifically, my recommendation is that for the Forex markets, that you develop a strategy that is good, right? You don't want a strategy that's killer on an individual pair and then isn't good on another pair, on another currency pair. You want a strategy that's pretty good on almost all of them, right? You want a baseline of profitability. You want something that's good. Because if you optimize, in my opinion, to Forex specific pairs, you're going to be moving to different Forex specific pairs. You're going to be, you will have curve fit, you will have over optimized to one particular ticker, and it won't work very well in the other. Now with Bitcoin, you can actually do that. You can actually over optimize to Bitcoin. So there's levels of this. You can optimize your strategy on Bitcoin to the degree that it'll work really good on Bitcoin because Bitcoin does move uniquely to other markets, and that it doesn't work out very well on other markets. That's fine. It just means you're going to have to make a separate strategy for those different markets. What you can also do, though, is just develop that baseline strategy that's pretty good on Bitcoin and pretty good on the other assets as well. And from there, you just continue. Then you can add layers of discretion to take what you have that's really, really good and make it fantastic or great, or you just continue to learn how to optimize your settings over time. So specifically, no, just in general, my advice is always just test it. Figure out what your baseline is, figure out what settings you can tweak. Back testing can take anywhere from hours to months. But it's worth the time and effort that's put into it, because then you will understand, you will see your statistical edge right in front of you. You will have confidence and conviction. You will have a signal that you will be waiting for. It helps instill the discipline and patience and statistical awareness that you need to be a successful, profitable trader. So specific tweakings, no. I find that the way that I've designed MKIV, WADA, time transformation, they work really good on just about any ticker that you want to throw them on, right? And then just by playing around with them a little bit and figuring out exactly what signal you're looking for, what strategy you want to follow with that indicator suite, you can quickly determine with some back testing like exactly how you want that to operate, and then just optimize from there. Thank you for the question. DIY guy says, howdy, I missed a roll call. Well, shout out to you, DIY guy. Was I late to class, sir? Because have you heard of Bitcoin? I have heard of Bitcoin. DIY guy says, what happens on expiry date of the futures though? Do you open another one or add to the position that's down? So when on futures, when expiration occurs, your position is settled at closing price, right? So BitMEX specifically, the way that BitMEX works is they shut down the market. Essentially, you can't input orders into the books 30 minutes prior to the close. And then what they do is they take a triple exponential moving average of the index price over the next 30 minutes. And then they start settling contracts out in chunks. I think it's like 45 seconds or like 50 seconds prior to the closing date. And the reason they do that is is to avoid manipulation, because it's not easy, it's not trivial, but it is doable to manipulate the market for a few minutes, right? If you got a lot of capital, you can dump on spot, you can go long, but the market, it's very, very hard to sustain that. So very much like an attack on Bitcoin, like you can try for a 51% attack, or you can try for a hash power takeover, but you can't sustain it, right? So even a 51% attack, the calculations have been run a bunch of times, it just depends, but you can't sustain a 51% attack for any period of time. Just like you can DDoS somebody, right? You can just blast them with signals so that they can't make any connections, but it's very, very, very expensive for you to keep that up, right? To keep that up for days. So, for example, like Like that's why time hash lock functions on Bitcoin for atomic swaps, for example, are very difficult to DDoS, right? If you somebody puts up their asset, like let's say that Silvio Macaulay pointed this out really, really good. Let's say that somebody, let's say that you're trading, you're swapping, tokens, securities or whatever assets that are tokenized on the blockchain, and I'm going to swap you, this shirt for that pair of pants. So the way that it works is that both put them up, and with Bitcoin, you can send a signal to reverse the transaction, right? If you haven't, if the other person hasn't followed through, right? If the other person hasn't followed through, so you can pull your transaction back. Well, immediately what an individual might think to do is as soon as that connection's out there, they'll just DDoS the other person. But because time hash lock functions on Bitcoin often have to be out there for a day or 3 days, settlement is slow, but it's secure. That it's almost completely financially unfeasible to do such things. So, sustaining a DDoS attack, sustaining a significant attack is very, very costly, very resource intensive, and just not very realistic. So very similar with trading. Like you can manipulate the market with large capital for a very brief period of time, but to sustain that, because you have all these other traders with differing desires and differing goals trading against you, the market reverts to normality. So you guys have seen this. Like you'll see these wild spikes, right? These big wicks to the downside, scam wicks to the downside, and those are caused by, if not exchange failure, they're caused by massive market sells, right? And what happens? The market maker bots and traders and limit orders and arbitrage bots, they just whoop, and price immediately returns to the median, right? So the reason why BitMEX in particular does contract expiration like that, and almost all exchanges have a system of contract expiration like this. I'm just intimately familiar with BitMEX's. The reason why they do this and do the TEMA of index price is to avoid that sort of manipulation. It's pretty smart, pretty easy. It's I think a member that I was talking to last night, a friend of mine, said that that's exactly what he would do, something like what he would do if he were going to create an exchange. So it makes a lot of sense. But yeah, very, very, very simply, right? If you have let's say you put on a short on XBT Z19 at 8,500, right? And XBT Z19 closes at let's say it closes at 69.20. Your trade gets settled, from whatever your entry point was to your closing price. And then the burden's on you if you then want to go to XBT H20, which is the Mayout contract, and you want to put on a position there to maintain your hedge. Well, then you have to do that. You have to do that actively. BitMEX won't do that for you. So thank you, man. Great question. See here. Devin Salmon says, I've been gone a while. Has backtesting shown that MynX works better as a line cross versus a zero line cross? So with the indicator suite that I'm currently using, yes. Again, it depends on your strategy. You can utilize, I know that people use time transformation and MynX all sorts of different ways that even I hadn't conceived of. And it's kind of difficult to write up strategies and walkthroughs for all of the potentialities. But so it just depends. So for those who are willing or optimizing strategies, maybe based around 2 or 3 confirmation setups, I think that the line cross gets you in earlier, especially if you're looking for those lower risk kind of early entries. But you often won't have volatility confirmation. So the zero cross tends to be better for long sustained trends. Whereas the line cross is going to be better for quicker trades, potentially even on lower time frames. So it all depends on just what strategy, what you're trying to do with MynX, right? It's good at whatever you want it to do, right? It's highly customizable. It's very modular. I think most people are going to be better served. That's why the default strategy is the zero cross. Potentially those who want to be a little bit more aggressive will look at least the line cross functionality. GT MKIV, it's probably GTMK4, says, hey, Justin, SIBA is moving up. What are my thoughts? Let's look at silver. The old zaggy zag. Yep, we got let's see here. Well, this is a breakout long signal on yesterday's candle close. Breakout long signal on yesterday's candle close. Silver's obviously been pretty choppy, but that's some pretty good volume and good volatility. It's definitely a good chance. Let's see if we're above. Yeah, so, 2 schools of thought on this. Take the breakout trade and be okay with drawdown, or, something like trade qualifier. Prices got to come back down under 1709. Between 1709 and 1701 would be a buy-in zone for silver. So basically, you'd have to see a little bit of a retracement of this movement, but you would be targeting that zone for a pullback entry, maybe even a reversal baseline bounce. But looks good. Let's see here. Let's take a look at the weekly. Or I wasn't even on the daily. What am I talking about there? Jeez, I apologize. I was on a lower time frame there. Yeah, so yeah, we talked about this earlier with silver. I'm sorry, I was confused by not looking at the daily. We talked about this back over here. Here was the long signal. Here was the long signal on silver right here within the qualifying zone. I thought that looked a little weird. I apologize. Okay, so let's just pull up Quadriga. I did this analysis live on the air just a while ago. So here was the long signal. We haven't hit TP1 yet. TP1 would still be firmly at 1721. Haven't had any exit signals. Another powerful signal from Watertar Explosion, potential continuation signal. This looks good, man. Again, we would have been in this trade, or this would have been a trade that my PTP system signaled on the 11th of December. You can see here, Watertar Explosion above the explosion line, my CCI dynamic above the dynamic 0 line, and mynx crossing above the noise line. And then again, here's the trending confirmation crossing above the 0 line on this candle. Didn't really matter which one you took, which system you had here at this point in time. Both got you in at a pretty good price. And that entry from the baseline, you're up about 1%, which is a really good silver trade. You know, let's see here. And, honestly, zooming out, let's take the indicators off. Zooming out. I mean, this doesn't look too bad. This looks kind of similar to Bitcoin, just with different volatility and a little bit of different structure, but bearish trend since September here, as opposed to June on silver. And, kind of a little bit of a double bottom here with something like a spring. That's pretty good. Nice little stop loss on here below and a pump up. And 1, 2, this will be a third tap at that level of resistance. And as I've said, approaching resistance and kind of creeping up on it. A level of supply. Let's look at VPVR. Yeah, nice high volume node between us and the point of control, and that's pointing us up to 1756. So if we actually get the volume on this move and we get that nice little breakout, you've got another 2.65% potentially before we run into our first major level of resistance. I think that looks like a good trade. Managing risk fairly tightly with anything below 1680 here, looking at VPVR. You don't want to get down into that low volume node. And of course, the baseline allows us to manage risk even tighter, because the baseline coming at 1694. So about the same, 1690, 1694. Yeah, managing risk below that level, trade invalidated, which would actually, depending on, volatility, would actually be getting you out right at break even. So pretty good trade. DIY guy says, why is everybody sketchy on being tracked? What are y'all trying to fly under the radar with? So for a lot of instances, you're right, man. For a lot of instances, you're right. But here's the thing, a lot of people do not take privacy seriously, and privacy is a right. It's a fundamental right of being human, right? And so systems are being designed. Many of the systems that currently exist aren't designed with privacy as a default. Most of the systems that are designed, Facebook, Twitter, all social media, your phone, computers, they're all designed by default to expose all of your information. And it should be your choice what you want the world to know. We are a private system, right? I'm a human here with my thoughts and my consciousness inside my body, and it's my right to share of that what I want with the world. And these systems are being designed that we are using for everything in our day-to-day lives more and more, without giving us the option, without requiring individuals to be fairly good with computer technology, computer science, to even opt for privacy. And I don't think that's the way the system should be run. And again, privacy is security, right? So privacy allows you, for example, and this is one of the ethoses of Bitcoin, privacy allows you to donate to charities of your choice, to support causes that you like, to fund political campaigns that you want, to give money to refugees if you'd like to support whatever cause you want. Your monetary transactions should be private, because that is free speech, right? What you choose to fund with your money is your ability to exercise your rights. And as long as people aren't hurting anybody, you should be able to give money to whoever you want, right? Now, there are, of course, going to be situations where we decide as a community that this entity over here is bad or evil or anti-society or not good. But that should be done on a personal level, right? You don't censor people's financial transactions. I don't think that's right. Right? I think that you change hearts and minds by appealing to a mass of people and making society good and making people not want to do evil things with their money. I think you change the world by making people want to support good things with their money, which is absolutely possible. Everybody, this whole very solipsistic and sardonic approach to life where, humanity is evil and it doesn't matter what you do. Like we're never, I cannot get behind that, dude. I cannot get behind that. I think that we can change the way that people think because I know that my thoughts have changed, right? I've seen the growth in myself. Children can be taught ethics. Children can be taught philosophy. People can be trained and become better human persons. We're just ignoring that, right? We're focusing on all of this nonsense, man, with where society puts its efforts instead of getting back to it blows my mind that it's 2019. So we've had human civilization on this earth for, let's just say 35,000 years of recorded history, right? And longer, obviously, but it's just 35,000 is a pretty good number. And there's not a proceduralized way to raise a child. That's insane, right? And it should not be like the government's right to tell you how to raise your kids. No. But I mean, for the love of God, can we not come together? Like the knowledge is out there. We just need to care to do it. Can we not to get together and come up with like a list of, well, overall, if you teach your kids these things, they will on average grow up to be pretty happy, functioning, self-confident, aware leaders, and brave and courageous and kind and all this stuff. That's the people we want, man. It's the people we want. And everybody's just running around like, oh my God, like, my kid won't get off the tablet and he's such a jerk and I don't know what to do with these kids. I don't know. It's called being a grown up and raising a kid the right way, man. I'm pretty passionate about this as a father, right? So my kids are awesome, man. My kids are super awesome because I took the time to teach them, right? Like, do I think there will be a migration? So thank you. Good question. But what are you trying to fly under the radar, DIY guy? Was that a red herring question that you threw up? What are you doing with your transactions, sir? I'm watching you, man. B-Flow asks, do you think that there will be a migration to Monero, or will Monero by then come with the possibility of the death penalty by the government? Will using Monero be punishable by death? I don't know, man. Like, Monero's cool and everything. I'm not huge on the Monero train. I'm just pretty big Bitcoiner. I think that, we're going to see second layer solutions. Lightning obviously gives us a lot of privacy implementation. So I think Monero's cool. I don't really have a strong opinion on it. Possibly, maybe. People might decide that Monero's better. There are some... I don't know. I got a Bitcoin bias, man. I'm sorry. Crypto and Tokens says, Justin, thoughts on France approving the country's first regulated ICO? I would invest if I could. Not financial advice, but I invested in the two companies in America that received Series A regulation approval by the SEC. There's only two of them here in the United States, and I'm also an accredited investor in the UK's first regulated STO. So. Huge advocate of those. Great. I mean, listen, every investment carries risks, but those are for me, those are no-brainer investments that I want to make just from a monetary perspective, right? I support the blockchain industry. I support the blockchain space. I think that STOs will be the future. I think that we are, regardless of how this Bitcoin thing goes down, regardless of where we go with this and what we're talking about, this technology has, so that's kind of worst case scenario, right? So let's say that, we're all wrong and, the financial industry is just going to keep on trucking and private decentralized cryptocurrencies are just going to fall by the wayside. What we are absolutely going to see is blockchain technology be utilized in every facet of our life. We are going to see all securities tokenized. We are going to see assets tokenized. We are going to see digital money. Absolutely. I mean, it's that regardless of what happens, whether we get the decentralization now or we got to wait a few hundred years or decades or whatever, we'll get it eventually because that's the obvious next step in social evolution. It's just the question is, are we ready for it right now? And I would advocate that if we can just pull our heads out of our behinds here and try to be honest, ethical people in the space, we can absolutely get there and self-regulate and change the world right now today. But I'm okay if it has to be my descendants that that end up carrying the torch forward. It's, you know, life happens, guys. Like everything in life carries risk. But yeah, I mean, you know, absolutely getting in early on the ability to get in on the first tokenized securities. To me, it's a no-brainer, right? It's not going to be the right choice for everybody, and I might be absolutely wrong and lose my shirt on some of these. But you know, low risk investments, you know, the opportunity to enter is a no-brainer to me. Crypto Moses says, I'm looking for a way to automate my system. Should I just put in the time and learn Python, or is there an easier and more efficient way? You know, I'm not an expert in Python, but it's not too hard to learn, man. There's, you know, especially nowadays, you know, you just go get, a lot of great like courses out there, man, that you know, hour a day, you know, spend a few months. I think it's a no-brainer if that's something you really want to be passionate about. Python's pretty easy to learn. And what you don't learn initially, man, you just learn over, you know, with Googling. Like, you know, figure out so much stuff with Googling, you know. Pine's cool. I write a lot of strategies in Pine. That's kind of my language of proficiency. It took me about a year to get pretty good with it. But, you know, I was up and writing strategies when I really got seriously about it. You know, when I really got serious about it in a couple months. So, and then you can automate that with AutoView or Gunbot or, you know, a lot of different systems out there. And there's some other platforms, you know, like Mudrex. You can like build strategies out there, drag and drop play style, which is pretty cool. So a lot of options for automating strategies out there, man. Or, you know, like what you can do is if you've developed the strategy, you can just, you know, hire a freelance developer to write the strategy for you, you know, and then just plug that strategy in the execution engine of your choice. Again, whether that be Gunbot or AutoView or, you know, whatever kind of thing. I don't really advocate for the use of AutoView. It's got some security concerns that I haven't quite figured out. But Gunbot's great. There's, you know, 3 commas you can automate to a degree. There's, you know, there's a lot of options out there, man. Crypto Rick says, hey Justin, why do you set your Renko to 15 minute as opposed to 1 minute? Isn't 1 minute more accurate? That's actually the 1 second Renko. So that's the most accurate Renko chart that you can get, the most time sensitive Renko chart that you can get on TradingView. And then Zero asks, and final question of the day, guys, before we kick it off. Zero asks, what do you think about VeChain? What do you think? It's bull or bear? You know, honestly, I like VeChain. I think it's a neato project. Let's go look at the chart. You know, this thing's in a VeChain's interesting. I don't call tops and bottoms, man. I'm not a bottom trader. You know, this was a nice kind of natural bounce that we got. Very, you know, it's very, you know, this is the USD pair. So this is what I like to look at for overall trend. We can see that it bounced right along with Bitcoin. It's having the exact same pullback. Why? Because Bitcoin runs this market, man. All things move and flow with Bitcoin. You know, independently of it, it doesn't look like VeChain. It looks like VeChain is dramatically underperforming Bitcoin at this point in time. So it would just make more sense to trade Bitcoin from a dollar perspective. From a stacking sats, so I don't really see anything here that's very significant. This could be a local bottom for VeChain, but that would have to imply that it's a local bottom for it could be a market bottom for VeChain, but I doesn't really feel like that to me. You got a pretty. We're kind of at the top of the accumulation zone. Let's see if we can get some consolidation here, and you know, maybe here in a few months we can get ready for another run on VeChain. That's typically when these things work. Let's look at it from a stacking sats perspective. You know, kind of a similar thing. VeChain is at demand, previous level of demand. I wouldn't call the bottom. Let's take a look at PTP here. Let's get our baseline up and out. Yeah, I mean, look at Wada Tar. We're just not ready. Let's get some consolidation. If we V-bottom out of here, those are trades that I don't take. Those are trades I miss. It's just not the style that I trade in. You know, let this thing consolidate for a little bit. Let's see if we can get some accumulation, and let's see if we can get a pop out and a breakout. Maybe we can take a VeChain trade. This is for me, anyways. This is a stay away from this right now. Let it cook, let it simmer for a little bit, and build up to a good trade. And if it V-bottoms, those are trades that those aren't my setups, anyways. I don't like. You know, oh, I caught the knife and I made a trade. It's a little risky, said. There's much better ways to trade. Okay, last question though. Don Camden asks, Justin, when interview with Brad Garlinghouse coming out? And whenever I'll interview Brad Garlinghouse whenever he wants to come on the show. Open invitation, Mr. Brad. Come on the show, buddy. I will be objective and neutral. I promise. DLive results. Distributed 53.1 lemons to our followers. Ricky Thompson locking in that 22.1. Forza World TV 13.1. Yugo Chill 9.7 and Kryptonian 7.9. Thank you guys for your thank you guys so much for your support and for your continued viewership of the show. And congratulations, guys. We'll be doing the exact same thing tomorrow. All right, guys. Another show. Another day. Thank you guys so much. You guys are absolutely fantastic. Hey, it's time to end the show. Because I want to go trade. Listen, guys, thank you guys so much for watching us today. I really appreciate the support. This has been another great episode of Breaking Bitcoin. Of course, I'm Justin Wise, lead analyst and senior mentor at crackingcryptocurrency.com. If your goal in the trading game is to become a professional trader and you would like to learn and receive mentorship from a team that deals in verifiable strategy, statistical edge, and psychological discipline when we approach our trades, and we view everything through the lens of risk management, you guys can come and join our group at premium.crackingcryptocurrency.com for all the information abounding all the information about what we do in the group. Of course, you can come into the Discord and read any of the testimonials, and you can try our 7-day free trial, which gives you a lens, a view into what we do in the group. Again, that's premium.crackingcryptocurrency.com. Guys, thank you so much for your continued support. If you enjoy what we do, make sure to support the show, support the stream. You guys know how to do it. You can share the link around to your friends, your family, maybe even people you don't even like as an early Christmas present. Make sure to go check out the interview that we just published yesterday with Silvio McCauley, founder of Algorand. I had the opportunity to sit down with him for about an hour in San Francisco. It is a great dive into some of the topics that we cover that nobody else covers, right? That nobody else talks about. Why are we in blockchain? What is the purpose of all this? Of course, Mr. McCauley, winner of the Turing Award for his work with zero-knowledge proofs. And whether you know it or not, if you're not familiar with Mr. McCauley, a lot of the stuff that's being used in open source cryptocurrency projects today, thank you. You guys can thank him. So brilliant man. It was quite an honor to sit down and speak with him. And really, honestly, I'll tell you guys from off camera, from obviously being there with him, really, really sweet guy, really kind individual. Anyways, definitely go check that out. Breaking Bitcoin Bits from last night and Breaking Bitcoin Bits from tonight coming out as well. We will be back tomorrow at 12 p.m. Central Standard Time on Friday to ring in the weekend, guys, of course, as we are every single day. If you guys would like to be entered into tomorrow's chance to win our XSPC giveaway every single day, make sure to leave a comment in the comment section down below telling us about your privacy, how you guys approach Bitcoin from a privacy perspective. Are there any methods that you utilize with your own holding to implement those strategies a little bit better? To keep your coins secure, to keep your UTXO split? Do you use wallets? Do you use mixers? Please don't reveal any of the personal information. Don't dox yourselves. But just a broad overview of how you approach your security and what your thoughts on privacy and security are would be highly appreciated. And you guys can, of course, support the podcast over at breakingbitcoin.money. Yes, the podcast is live. You can get it on Google. You can get it on Spotify, Podbean, iTunes. We're all over the place, guys. Highly appreciated if you enjoy the show. 5-star reviews really do help us with the algorithm over there. So thank you guys so much for your support. And, of course, I want to thank today's sponsor, Coygo. You can check them out at coygo.crackingcryptocurrency.com, coygo.crackingcryptocurrency.com. Their platform is absolutely free to use. We don't make any money from you clicking that link. It's just there so you guys can get the platform. It's free to use, as I said. Definitely go give that a try. And of course, today's crypto comment giveaway sponsor, Spectre Security Coin. Okay, I got through it all. Thank you guys so much. Trade safely, and I will see you all in tomorrow's episode.